Welcome to your free finance course. No fluff, no sales pitch, just the essential knowledge you need to take control of your money. By the end of this video, you'll understand the foundations of personal finance, how to save money, and how to start investing wisely. Most people think finance is complicated, but really it's about habits and knowledge. You don't need to be a math genius. You just need the right mindset and consistent action. Let's start with the basics. Financial literacy. This is the ability to understand how money works, how to earn it, spend it, save it, and grow it. Without financial literacy, even high-income earners go broke. The first rule of money management? Track every dollar. If you don't know where your money is going, you'll always feel like you never have enough. Use a budgeting app, spreadsheet, or even a notebook. Awareness is step one. Once you know where your money goes, create a budget. The simplest one is the 50/30/20 rule. Spend 50% of your income on needs, 30% on wants, and save or invest the remaining 20%. But saving isn't enough. Inflation slowly eats your cash. That's why investing is essential. Money sitting in a savings account loses value over time. Money invested in assets has the chance to grow. Investing can feel intimidating, but you don't need to pick the next Tesla. Beginners should focus on simple investments like index funds or ETFs. These spread your money across many companies, lowering your risk. Before you invest, build an emergency fund. Aim for 3 to 6 months of expenses in cash. This protects you when life throws surprises like job loss or medical bills. Let's talk about debt. Not all debt is equal. High-interest debt like credit cards is toxic. Pay it off as fast as possible. Low-interest debt like a student loan can be managed while you invest. Robert Kiyosaki, author of Rich Dad, Poor Dad, says the rich don't work for money, they make money work for them. The earlier you invest, the more you benefit from compounding. That's when your money earns returns and those returns earn returns. Compounding turns small amounts into big amounts over time. For example, investing $100 a month for 30 years at a 10% return can grow to over $200,000. But investing is only one part. You also need smart goals. Be specific. Instead of saying, I want to be rich, set goals like, I want to save $10,000 in 3 years, or, I want to invest 20% of my income every month. Self-improvement plays a big role too. The more you learn, the more opportunities you can create. Read books, listen to podcasts, and follow credible finance educators like Jeremy Lefebvre or Savvy Finance. Let's talk about the stock market. Stocks are pieces of ownership in companies. When a company grows, your stock becomes more valuable. But prices fluctuate, so patience is key. Some of the best stocks to buy are companies you understand. If you can't explain how a company makes money, don't invest in it. Big names like AMD and Palantir are popular now, but learn why before buying. Diversification matters. Don't put all your money in one stock. Spread it across sectors: tech, healthcare, energy, consumer goods. Index funds automatically do this for you. Avoid trying to time the market. Even experts get it wrong. Focus on long-term investing. History shows markets rise over decades, despite short-term crashes. Financial freedom isn't about being rich tomorrow. It's about having control over your life. That starts with money management and grows with investing. Let's cover income. If you only rely on one job, you're at risk. Explore side hustles, online businesses, or freelancing to create extra income streams. But don't chase every shiny object. Pick one way to earn extra money, focus on it, and let it grow. Consistency beats jumping from idea to idea. If you want to build wealth faster, increase your income and reduce your expenses at the same time. Live below your means while earning more. That's how millionaires are made. Another powerful move? Automate your savings and investments. The less you rely on willpower, the more likely you'll stick to your plan. Smart investors educate themselves. A free finance course like this is a start, but take time to learn about taxes, retirement accounts, and different types of investments. Don't compare your progress to others. Some people inherit wealth, some get lucky. Your focus should be on building a plan that works for you. Financial literacy for beginners is about mastering the basics: budgeting, saving, avoiding bad debt, and investing early. Get these right and you're already ahead of most people. Remember, the goal isn't just money. It's freedom. It's options. It's being able to live life on your own terms. Robert Kiyosaki says the poor work for money, the middle class work for security, but the rich work for freedom. Start thinking like the rich today. 2025 is full of opportunities. AI, tech stocks, and new businesses are booming. But knowledge will always be your best investment. If you want to build wealth, learn the game of money. Read, practice, and take action. Don't just consume videos. Apply what you learn. Your first $100 saved, your first $500 invested. Those small wins build confidence. Over time, they compound into life-changing amounts. The secret is simple. Earn, save, invest, repeat. It's not flashy, but it works. So if you've made it this far, you're already doing more than most people. You're investing in yourself. Which of these lessons will you apply first? Let me know in the comments, and subscribe for more free finance lessons every week.